Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Today is Friday, May 3rd, 2024. As expected for my crystal ball reading, the actual unemployment rate for this month went up again. I've showed in previous shows how this has been ticking up a little, down a little, up higher, down a little, up higher a little, down a little, and it was higher than what was expected. This is what great master Gareth Soloway had seen in his readings of what was going on, and also in my own crystal ball reading. Also notably, the ISM services came out much lower than expected. We actually expected to go from the last reading of this 51.4% to go up to 52%. In other words, expansion in services, but instead we're actually seeing a contraction. Anything below 50% is a contraction. Services typically is a good thing for the summer, and to see contraction already, in other words, businesses are like, we don't need more people to provide services because they don't need people to provide more services right now. Like I said, I believe usually there's services increase for the summertime because people do more driving, people do more vacationing and spending, and to see a contraction here is interesting. Something Master Gareth Soloway brought up that is not in the, it's something that you have to dig a little bit to find, but the U6 unemployment rate, he brought this up, and the last reading of this was 7.3%, 7.4%. So the U6 unemployment rate gauges basically people that are underemployed. So in other words, someone that had a full-time job, let's say with benefits, and now they were reduced to a part-time job. So they're not completely unemployed, but they don't have all of the work that they would like. They're not getting all the income they would like, and they're getting a little squeezed. And this number going up is a sign of problems ahead, and this has been going up. I found on investing.com here a chart of the U6, and you can see if you look closely, the year 2000, you see this going up right into the dot-com bubble from 7 all the way to 9 or 10%, and then by the time we get to 2007, right before the great financial crisis, we're still at 7 or 8% and going all the way up to 16%. And again, the COVID crash, we went all the way up to 22.8%. And so, more recently, if we scroll in here, from the COVID crash, this had gone down. People got all the employment they wanted until what it looks like maybe we had a bottom in January of 2023. Since that date, this has been going higher and higher and higher. And actually, the last reading is not on this chart here. It only goes up to through the March rating of 7.4%. Now, does this mean that it's necessarily going to pop higher here? Not necessarily, but historically speaking, once this starts climbing, I mean, usually in good times it's going down, 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 right? And then when you have trouble ahead, it starts inching up and then it explodes up, inching up, and then all of a sudden explodes up. So this is something to take a good look at, to be following closely. Another great leading indicator for where things might be headed. For now, smart money, the bonds that have higher yields, people that are lending money basically to companies that have to pay a higher interest rate on their debt, these bonds and preferred shares are in this fund, HYT, and it's my favorite leading indicator. This thing popped way green today, which tells me there's a lot more confidence in markets today. It's almost like people were afraid of I don't know, maybe unemployment like spiking way higher than previously, and that's what was sort of suppressing this. Or maybe, it has to do with the Fed funds futures. They know it's going to be going down. They see it seems like the market today, especially along with HYT, seemed to take this as like, okay, we can calm down. We certainly also saw this in the VIX. I've been talking about for the last week, actually, the VIX coming down to this trend line that we had, and we just slammed right through it today. And so this is the HYT and the VIX are showing a lot of support for investors, including smart money, being relieved here. Now, I do need to add to this that part of the reason HYT can go up has to do with yields themselves. And so when you have something like TLT going up, what did it go up today? That's kind of weird. It's red, but it says plus 1%. It went up 1% today. And so with yields on the treasury bonds going down, it allows an automatic higher valuation for high yield corporate. But this is a pretty strong move up here. And zooming out a bit, this does not look weak. This is popping up here. Sorry, wrong chart here. Here's the daily. Each one of those little tiny candles is 1 day. This is showing a lot of strength. That's a big, healthy green candle right there in HYT. And that actually tells me that, I've been talking for weeks about how the markets are just going to go down from here. Everything's going to curl over. I'm not convinced anymore. It looks like we're back into a bull market. From the VIX, HYT especially, nothing's really freaking out here. There's no run to safety. It's like it's calm. It's calm right now, which means things can melt up a little bit here. With all of that said, not every chart is 100% convinced. This is a weekly chart of the S&P 500. As you can see, this week, this candle type is a hangman. And so this is not a strong move. If you wanted this to be strong, you would first of all want to break out of this previous very large bearish red candle from the week of April the 14th. And also you want to see a solid green candle, not one with a huge tail like this. This can easily be a signal for a reversal here. So I still have a little bit of caution. Overall, for the next few months, I am still bearish, but maybe for the next few weeks we could see some choppiness here, going sideways up a little bit. The reason I'm still bearish partly is, if you're paying attention to news reports at all or earnings, company after company after company after company are showing weaker earnings, weaker guidance. And when that happens, when you have earnings contraction, the PE ratios go up, and so the stock market as a whole becomes automatically less valuable because it can earn less money. And so, we're still at that phase. The Fed has not released its hands yet off of the neck of the economy, and it's just very important to realize that that's where we are. Notably, the CNN Fear and Greed Index is still solid in fear mode, even though we had 1% pop up in the S&P 500 today, along with lower expected rates, with TLT going up and the stock market going up. The dollar actually broke down here. I've been talking about this candle here on Tuesday. I saw we broke out of this channel. I was thinking, well, this is your typical bull flag pattern here, but we broke the next day back into this. I was still thinking we'd break out of it higher, and no, we broke down out of it lower. Again, with a pretty big tail here, but the dollar looks like for now it is looking bearish. And so in the very short term, it seems like that stocks can go up a little bit here, but I'm not betting on that. I'm sitting on the sidelines, and I'm pretty highly invested in ZROZ. It's similar to TLT with longer duration. I have 46% of my portfolio in that, and 21% in cash. I'm happy to have cash that is earning 4.5%, all while, I mean, it's just silly how much you can get right now from a money market account compared to the valuation of stocks in general right now. Cash is not trash right now, I'm gonna say. My portion of 10% portion of China grew to 11% recently. I have Brazil, a little chunk of uranium, and most of the precious metal category is actually REMX. I've been talking about this a lot. It seems like it's been, or rather is, undervalued and has been undervalued for a while. It's just one of those areas that looks unloved, that just needs to get to a normal price to make a very large amount of capital gains percentage wise. But in the end, what do I know? I'm just the guy with the crystal ball. And that's all I have for you today. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.